Welcome, ladies and gentlemen. It's Rob. Welcome to the Market Intelligence Report, and that is for Monday, October 10th, 2022. Hope you're having a fantastic day. Hope it was a great trading day, and it has been a good trading week for you. Hopefully, you've been cautious with the market that we're dealing with out there because it is freaking crazy. Guys, look at what went on this week. I mean, if we look at the VIX, I'm going to kind of bring this in a little bit, right? So you go back 1, 2, 3, 4, 5. So this was Monday. So we gapped up Monday, we pulled back, and it was like, woo! Okay, everything's going good, right? Then Tuesday, Wednesday, and what happens? OPEC comes out and slams us with a 2 million barrel cut in oil a day. Double what the U.S. has been using in its reserve stores. And not only was it OPEC, it was OPEC plus. Even Russia agreed to it, OPEC plus. So VIX wound up climbing back up, and if this was Friday's VIX, which it is, we almost got back to where we were. You'll notice I've got red and green zones on here. I also happen to have some yellow zones down there. I'll be explaining that in the near future. For now, red, bad, right? Really high vol. Now, bad. What does bad mean? If you're a seller, it's really good. A lot of premium in the options. As a buyer, really bad. Fear, really bad, right? We get up now. Have we been higher? Without a doubt. But that doesn't mean 30, 31, 32 is not high. It's too high. Right? It's not what we want to see on a normal basis. Get up there a little bit, come back down. Life is good. But we were already on that downward stroke, and then we whoosh, snap back up again to the upside. So we're sitting at 31.30 on closing basis today for VIX. Let's go take a look at the S&P 500 now. And let's see what the heck happened there. Well, you can see the entire fib, and I'm going to grab a drawing tool in here, guys, because you really need to see what in the world has happened. I mean, you got to get your head around it. Great V top. Right, pull down. There's our V bottom. Right? We moved up into the 50 percentile. There is our upside down H that never stopped. Right? And what happened? We got down into this dreaded box of neutrality, and we lived there for such a long time. And we gapped out of it this week. Right? When you look at it, here we are Tuesday. We gapped right out of there. And people are like, yes! Yes, yes, life is good, right? Life is good. And then what happened? We get another nice, we gap down, we pull down a little bit further, we break through the 8 moving average, and we pop back up again, and now we hit the 3,800 level, right? And that was on Wednesday. We bump our head on ugly, which is that 21 moving average, and then we open lower again on Thursday. We push down not as far, we come back up to the 21 again, and wind up closing lower than we opened, without a doubt, but not down to the lows of the day. All right, that wasn't too bad. That's yesterday. Now, today, Friday, what happens? Slam. Unemployment numbers come out. Payroll numbers come out. People are freaking out. Unemployment is looking better. What does that mean, better? Well, there's less of it. That means less people on unemployment. Not good. Not for this environment, not for this economy, not for what the market's looking for. They wanted more people on unemployment because it means what the Fed is doing works. I don't think what the Fed is, well, I don't think the Fed's doing anything that works, but I don't really believe that this is that we're there yet. We're going to get there, but we're not there yet. Don't ever believe this is the end, right? Oh, woe is me. What a life. Don't worry about that. We're going to come out of it. Right now, we've got to deal with what we're having or have happened right now. Where are we? Back in the blue zone, back in the dreaded box of neutrality, almost back down to the lows that we have seen since hitting the highs, right? Back down to these levels yet again, blowing away the 20%. We're about 24% again right now, 24-25% pullback right now on the market. So what are we looking at for next week? All right, let me scrunch this chart down and let me give you some numbers, give you an update so you know what to be looking for next week. Here's the saving grace. We didn't chip away at the ice today. What does that mean, Rob? If you've seen some of my previous videos where I talk about wicks breaking through, right, like it did right here, we kind of broke through the bottom of that fib line and we snapped back up, which gave way the next day to pierce through. So I'm looking through to see for next week, are we going to break that 3616 level? Are we going to break that 3600 level? If so, we've got nothing stopping us. We've got fib lines in there, and they're important, and they are going to be support levels. But what I'm talking about, nothing stopping us, is we got a ways to go, my friends. A ways to go to get back there. right? We're talking about going all the way back here to December of 2000 to get back to those levels. I know this is a busy chart. I apologize for that, right? I'll fix that for you. There, see, that's much more better, right? So where are we looking at? If we break that 3615, 3600 level, we're looking at a move down to 3532. And from there, we're looking at 3500. Now, that midpoint is where I tell you, where I keep saying it's going to. It's not if, it's when. 3382.50. Mark my words, we're going to get to that level. It may be next week, it may be next month, but we are getting there, right? We are going to make it down there. We are going to test that level, and then we're going to test, and we're going to think. And depending on what's going on economically, will make a difference of where do we go from there. Does it go back up? Does it go back down? I don't know. Let's see when we get there. How close are we to the elections? What's going on? Did we fix the oil debacle? Did Venezuela decide to produce more oil now that we have to take sanctions away from them and give them stuff we don't want them to be able to do, right? So we can get oil in there so we can not have these crazy prices again. $4 a gallon by December is what's expected because of what just happened. That's when we'll see all the cutbacks kick in, $4 a gallon in gas and climbing. It's not going to be a good situation at all. Right? So if we bounce this week, that would be nice. If we bounce this week, we're looking at the move back up to 3,700 and then 3,719. Those are the two next upside targets. We've got a confluence of the 21 moving average bumping our head on ugly. There's a strong ceiling there, but that doesn't preclude us from breaking through and getting up to 3,767, which puts us back into a neutral bias. But right now, true bear, baby. The bear is out. How does a bear fight? Paw up, swing down. That's the way the market goes, right? I think the bear's just punching you in the mouth is what's happening there. Hopefully you're able to capitalize on the market this week, take advantage of it. I hope you crushed it on your trades this week. And with that, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Take care, everybody. I will see you at our next update. Bye for now. Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up. And go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I've put together just for you.